sometimes I get a little concerned around Bitcoin getting ahead of its skis. Other times I get a little concerned around gold getting ahead of its skis. Right now, I mean, gold, just by more metrics, is kind of sentiment overbought. Even though I still think the long-term case for it is good. But I mean, over the next 6-12 months, I put my vote for Bitcoin. I think that kind of that rotation, and I could be wrong in this. Maybe we look back 12 months from now and maybe gold still outperformed again. But my guess would be Bitcoin is probably going to take over for a while. I think partially we had to see some of the MNAVs, like overvalued MNAVs of treasury companies, deflate to some extent. Once we saw like altcoin treasury companies coming to market, basically at that point, you just kind of have to expect there's going to be a washout to kind of get the kind of tourists out of the system, both in Bitcoin and around Bitcoin. But then that allows for a platform to rebuild from. And now that we see the Fed getting a little bit more dovish, we've seen some of that kind of already get washed out. I think Bitcoin's in a better place for the next 6-12 months. Going forward would be my base case.
Lyn Alden compares Bitcoin and gold, two things she frequently examines side by side as long-term value stores, in a meaningful manner. The market capitalization of gold is about 10 times that of Bitcoin, making it the more established of the two, she explains. Gold is therefore still favored by institutional investors, who view it as a tried and true hedge against inflation and currency depreciation. On the other side, Bitcoin is frequently seen as a more risky but more lucrative asset. It's like a tech-driven, digital version of gold that responds more strongly to market emotion. Lyn notes that although gold looks a little overbought at the moment, its long-term fundamentals are still sound. In the meantime, Bitcoin keeps drawing interest due to its potential for expansion and its function in a shifting financial system. For further updates on Bitcoin and the wider world of digital assets, please take a moment to like this video, subscribe to the channel, and enable post notifications before we go any further. Thanks, and enjoy the video.
At least I try to be objective as possible, regardless of what's going on. I think kind of what we're in now is fiscal dominance still. So the same drum I've been beating for a while, but it's kind of fiscal dominance with a slightly slowing underneath aspect to it, because we have other headwinds like tariffs, a little bit of cracks in the labor market, nothing particularly strong. And so it's kind of one of those things where data, you can always find data to support something if you want to find the things that are kind of running hot. There's plenty of data points out there to find them. If you want to find the things that are looking really bad, I mean, commercial real estate's slowly been having issues, and obviously the residential real estate market's been, at least volume-wise, pretty much slammed shut for a while. Like I said, little cracks in the labor market, a lot of indicators still not looking great. So any camp can kind of find what they're looking for. But I think basically the summary is the private sector itself is in a somewhat sluggish state right now. But when you're running 6 or 7% of GDP structural deficits without a recession, that is a type of stimulus. And I think that's the environment that we're in. And that's a lot of that is baked into the cake rather than something that it was kind of an active decision this year or last year. It's kind of more structural. It's based on entitlements. It's partially based on interest expense, partially defense and all this stuff that's intertwined there. And a lot of that is pretty embedded in keeping things somewhat elevated in kind of that K-shaped economy or two-speed economy, whatever terminology people use. I think it's because it's reality versus expectations. Part of why I've not been that disappointed is because I've been more in the, I sometimes describe myself as like a bearish bull on Bitcoin. I try to always have conservative bullish targets, which is, it's like I'm always like, I think it's going to outperform things, but I don't think it's going to the moon anytime soon. And we can talk about why that is, but part of the reason I like to hold both is because they don't always perform well at the same time. Sometimes Bitcoin gets ahead of itself. Sometimes gold gets ahead of itself.
Right now it's gold. Yeah,
gold's still, and gold's the larger asset by a factor of about 10. A lot of the biggest pools of capital still understand it better than Bitcoin. Bitcoin's viewed more as like a tech play, something that has to do homework on to figure out. Whereas gold is, been around for a while. Sometimes I get a little concerned around Bitcoin getting ahead of its skis. Other times I get a little concerned around gold getting ahead of its skis. Right now, I mean, gold, just by more metrics, is kind of sentiment overbought. Even though I still think the long-term case for it is good. But I mean, over the next 6-12 months, I put my vote for Bitcoin. I think that kind of that rotation, and I could be wrong in this. Maybe we look back 6-12 months from now and maybe gold still outperformed again. But my guess would be Bitcoin is probably going to take over for a while. I think partially we had to see some of the MNAVs, like overvalued MNAVs of treasury companies, deflate to some extent. Once we saw like altcoin treasury companies coming to market, basically at that point, you just kind of have to expect there's going to be a washout to kind of get the kind of tourists out of the system, both in Bitcoin and around Bitcoin. But then that allows for a platform to rebuild from. And now that we see the Fed getting a little bit more dovish, we've seen some of that kind of already get washed out. I think Bitcoin's in a better place for the next 6 to 12 months going forward would be my base case. Some people like gold, some people like equities, some people like Bitcoin, some people like real estate, some people like all the above or some subset of the above. I'm kind of in I like equities and gold and Bitcoin. But I do think that Bitcoin is, if you look back 5 years from now, it'll probably have had the best performance of that group, I'd expect, probably 10 years as well. And it's one of the things you can do. When we look at like the public level, I mean, nothing short of like really fixing healthcare expenses, for example, or fixing just the overall, revenue and taxation aspect of the government is really going to meaningfully address this, which mostly puts it down to the individual. I think Bitcoin's in a good space for the next 12 months. I think we've seen a decent amount of washout. So just unlevered self-custodial Bitcoin is, I think, in a great space right now. Some of the better treasury companies that are either cash flow neutral or positive and their MNAVs have come down a lot. I think that's been somewhat de-risked, especially if the ones that also have pretty low leverage. I think those are in decent shape. Gold I like longer term, but the value investor in me is a little bit, it came up pretty high pretty fast.
Yeah.
I started warning about that back in April, and it did this pretty long consolidation. It recently just broke out of it. So I got a little bit more kind of bullish again, but it's still just a little frothy. We'll see.
Okay.
I've been, emerging markets are one of the areas that, I've actually kind of liked, or at least select emerging markets. It was kind of off people's radar. But it's something that, I've been pretty bullish on, and I still kind of continue to be probably for the next 12 months or so. I still think there's kind of room in the cycle for that. But I do think that probably unlevered Bitcoin is in a pretty good space right now.
Lyn Alden also identifies emerging markets and artificial intelligence investment as important topics to keep an eye on. She cautions that even the AI industry can overreach, despite the fact that it has recently been one of the only significant drivers of economic growth. Given the extent and significance of AI, even a one-year delay or slowdown in investment might have a significant effect on the economy. However, Lyn has a positive outlook on some emerging markets. These marketplaces are frequently disregarded, yet in the appropriate economic cycles, they might yield large profits. She thinks there is still potential for some emerging markets to beat developed economies over the course of the upcoming year, so it is worthwhile to monitor them. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
And especially with the new credit instruments that they've put out, they have a difficult time figuring out how to value the other treasury companies.
Yeah, and I think it's a new industry, so it makes sense. Many of them do have elements that are speculative. The only one that I've ever owned is MicroStrategy. I would own Metaplanet in certain valuations. I've been watching that one now that it's come down. I think that one's very well managed. I think those are kind of the two cream of the crop that are out there. I think what makes a good one is that you generally want to be the liquidity leader in your market. So in the US, that's MicroStrategy. In Japan, that's Metaplanet. There are other opportunities for other big capital markets as well. I think the market's made it clear that if one is unprofitable, they tend to put a pretty big discount on that, just because they view it as a liability to the longer term Bitcoin strategy. In addition, if you're the third, fourth, fifth, sixth most liquid one at what you're doing, it's just challenging. Now, that's where they can add differentiation. If one has cash flows, they can kind of market that and say we're a hybrid entity. We have this other business that's not Bitcoin, and so you can kind of put the two together and they can balance out each other's risk. So they have to kind of explore what's going to work for the market. But I do think it's healthy that a lot of this was washed out, just because whenever something starts to look like free money, that's when more entities are going to come in. That's when you're going to get, like I said, there were like altcoin treasury companies coming to market. It kind of needed a reset. I still think the model makes sense, which is, and there's a couple of different models here. One is the pure play. I think that one, it really helps to be a leader in your market, kind of one of the top two or so. But then there's a long tail of just any company, if they want, if you're selling, whatever the case may be, to have Bitcoin on your balance sheet and make some sense of that. So I think that's still a long-term strategy. And I think that we're in a healthier spot now that some of this has been kind of, the froth has been reduced. So I think five's certainly more doable than 4, but I think that there's some things I'm more sure on than others. One is I don't think we're going to see a new low in mortgage rates. I think we've seen like the generational low, my base case. I certainly think we can go off our highs. Judging by what we saw this week, and actually the last time the Fed cut rates, which was something like 9 months ago, longer rates don't necessarily follow when they cut rates. So sometimes the long end of the curve, treasuries, mortgages, things like that, sometimes they go sideways to up, even if the Fed is cutting. It could be because the market is, losing confidence that they're going to control inflation. Therefore, they price it into the longer end of the curve, whether it's mortgages or treasuries. Other times, it could just be a trading decision, kind of liquidity analysis and things like that. My base case is we'll be in this range. To get lower on that range, it could be that the Fed or others do actions to push it down. Or it could be, going back to some of those other things, that the labor market breaks more than it has been. If maybe we have another tariff escalation or, basically a major tax increase, if some of these things hit and do slow things down more than we've seen for a little while, you could get a pull down and longer in rates. But it wouldn't necessarily be the type of environment people are looking for, because it could be associated with job losses and things like that. So, I think the challenge is, regardless of where they end up, I don't think we're seeing a lower low.
Lyn Alden offers a thorough analysis of real estate, mortgage rates, artificial intelligence investing, and businesses that specialize in Bitcoin. She points out that the most prosperous Bitcoin businesses are typically market leaders with substantial liquidity, such as Metaplanet in Japan and MicroStrategy in the United States, while businesses with supplementary cash flows or hybrid business models can balance risk and stand out. Those that are unprofitable or have a smaller market share frequently suffer steep discounts from investors. Given that a large portion of the speculative froth has subsided, she thinks this industry is still sustainable in the long run. Lyn thinks mortgage rates have probably reached their generational low, referring to broader financial developments. As a result, there won't be the large cycles of refinances that once increased household spending, which will leave less surplus money in the economy and create a two-speed economy. The investment in AI capital has also been a rare area of growth, but even this industry is susceptible to short-term stalls, and given its size, even a brief lull might have a significant effect. Lyn keeps a steady but cautious eye on residential real estate. Due to a financially dominant environment, national averages are probably going to meander sideways for a number of years instead of collapsing. Even if costs seem excessive in comparison to wages, she argues, time and inflation may eventually bring things into balance. In general, she stresses a measured long-term view. While some industries may appear speculative at first, market structure and fundamentals are more important than hype. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content. And as always, happy investing.